So today is 26th of December, Boxing Day. So I start off by looking at the SPY, which is a representation of 500 of the main stocks. So if this is doing well, generally the market does well. So this is a 5 minute, and this is the 1 minute chart for the SPY, and that's the daily. So this, when the market closed in this purple background, you can see price coming down here, and then it just gapped up. So when the market opens, it's going to be opening a with a price increase. Okay, so that's good bullish signals. So what I look at then, that gives me some confidence in price rising when the market opens after a sell-off. So this is my scanner to see what the particular stocks I'm looking for. I'm looking for kind of mid-cap stocks that have increased at least 4% during pre-market. So I've got, it's showing me these three at the moment. I try and look at the one with the biggest volume and the biggest change as well. So it would be NIO and this one, Garcelle. So I'll have a look at those. But before I do that, I have a quick look. I can't be bothered researching, so I asked ChatGPT, is there a strong positive catalyst for, let's see, NIO today on this. I'll just write KISS to make keep it simple, stupid, so it doesn't give me an essay. I do this because when you have prices that increase or rally up, you need it to be increasing for a good reason, not just randomly, because if it's random, it's pretty likely that it's going to come crashing down, right? So we want it to come down a little bit for us to get in at a good price and then go back up, right? But if it doesn't have any reason to go back up, we're in a bit of a trouble. So basically, I wouldn't read everything in this. I wouldn't understand everything in detail here, but I'm just looking for a general yes. The NIO has experienced a strong positive catalyst today, primarily influenced by two key developments. Okay, so basically, good things happening. And then I will check for Garcelle. Most likely something is good. Something good is happening, but I just want to double check. Yes, a significant positive catalyst has agreed to buy Garcelle up to. Okay, some type of acquisition, is it? Okay, so something good is happening for both of them. Okay, so I'm okay with trading them. So then I go to my trading platform. Let's look at NIO. This is not NIO. Why is it not updating? NIO. NIO. And this was, the other one was Garcelle. So no point having this. Let me get rid of that. Okay, so I'm going to switch to 5 minute and then mark out my levels. So what I want to do is find out, obviously price has increased, but I want to see where it comes down to and then bounces off. So where that area is called a support. So it bounced off this area. It seems to have kind of bounced off this area, I guess. That's quite high up. So I wouldn't be really interested. I wouldn't be looking at this area so much. But I'll keep it there anyway. And then I also want to mark the highest point in the pre-market. So I got that. Okay. Usually, I would also mark where the day closed as well. The previous day closed over here, right? The red candle, and then the market closed, and this everything happened after outside the market hours. Um, I guess I'll leave that there, but usually I would have this as a key level if price is around over here, and then when market opens, it comes down. This would be like the last level, but seeing that in pre-market or extended hours is already come lower than the close, it might not be a strong key level or stronger, but I'll leave it there anyway. So that's it. It's easier to mark these levels on the 5 minutes because there's less candles to deal with. And when I'm looking for a trade, I would jump to the 1 minute to see what's actually happening. Okay. So I've got my levels there. So ideally what I want to happen is the market opens because price has jumped up. Some buyers would sell their shares to take some profit. So if a lot do that, the price will decrease because of all that selling, and then you should bounce off one of these areas. Okay. So I guess there's only two levels for me to do it from. So I would place a limit order here and then another limit order here. The idea behind it is you don't have to get it right first time. It's a statistical game. So let's say I try 3 trades, right? 1, 2, 3, and I'm risking $500 each time. Okay, so if I lose 500 here on my first try, and I lose 500 on the second try, ideally on the third try, I should make up those losses and make more. Okay, so this is 3 times as much of the amount that I've lost. So this would be a 3-to-1 risk reward ratio. Okay. So what we do, we enter a trade, stop loss at 500, and then a take profit would be up 1500, so 3 times as much. If I want to play it safe, when it comes to twice as much, like 1000, I'll probably take half of my size off just in case. So I walk away with $1,000, just in case the price drops, and I would increase my stop loss from negative 500 just to break even. Okay, so that's that. And what I've noticed as well, when the market opens, I check the price and then I put my order in, but then I keep rushing. So I'm just going to put orders in now. So when it comes here, I want to risk about up to here, I guess. And when it comes to this support level, I want to be selling. Okay. So how much do I need to buy for that? Let's see, 500. Okay, so say 18. Yeah, that's about right. So we'll do that, 18,000 shares, and sell around here. Actually, what is this? This is a 1 to 6 risk reward. That's not good enough. 3 would be over here. Okay, 3 would be over here. Okay, so I guess how much is a 2? Risk reward, that's 1. Okay. So basically, what I'm saying, when I reach a 2 risk reward ratio, I want to be selling half my position. So I want to just keep this there for me to know when it gets around this level, I should be um, selling about half, and then the remaining I would sell over here. Okay. If that doesn't work, let's say this doesn't work, if the price drops even more, then I want to buy again over here uh, for around another 18,000. Sell half. Okay, so I'm just going to leave that there. Actually, anyway, let's go down to this one now. I'll sell and see what's going on. Same thing, 5 minute, and mark out the levels. So that's the highest in the pre-market event. When the market closed, it was around here. Seems to be a support as well during the pre-market, and I can see another support here. So price bounce around here, not going below that. So this is more of a tighter range. This is part of the extended hours as well, actually. So I would say around here as well. Is where the price went up quite high. Didn't go higher than that. So I guess this one's more tight. Not super comfortable with what to do here. I guess if the market would sell off a tiny bit or jump around here. So let's see. I guess I'll have a stop loss around this area. And then let's see how much I should be buying. 8,000. I'm not very good at math, so this is just me trialing and error. Let's go for 7,000. 7,000. I want to get it pretty similar to this because I want to keep, for all my trades, I want to keep my risk and reward the same. So, I don't want to mess around with the variables too much because you got to see it like an experiment. So we're testing the strategy, not our risk and all that. These levels keep moving otherwise. Okay. I want to get this up to 3. Okay, so that's 3 there, risk reward ratio. So I guess when it sells around, hopefully it sells off a little bit. If it does, I'll buy around here. If it goes below this, I'll take my loss. I'll sell around here, and I'll add another one for if it goes to two risk reward ratio, then I'll sell half. 2 would be around here. Okay, so that's all set out. So today, 1, 2, 3 trays I'll be taking ideally. And then yeah, with the Excel sheet that I showed you, if I get one of these trades right, I'll still be profitable. Okay, so it's now just a waiting game. When the market opens in about 15 minutes, and we'll see what happens.